All right, rate cut pressures are boiling. Are we going to see an early rate cut? We'll break it all down for you. My name is Paul Barron. Welcome back into Tech Path. Let's get going. I do want to thank our sponsor. That's Tangem. This is a place where you guys can go out there and get your own self-custody structure in place. And if you're brand new to crypto, I would tell you right now, this is one of the steps you should be taking. Get into some self-custody, start moving some of your assets into that. You can do that through Tangem. It's a little credit card-like thing that works with your phone, makes it very secure and easy to set up. So just visit tangem.com. You can get this done in 3 minutes. Guys, it's not easier than that. Just use our link down below, get you some discount, and get going on self-custody. Let's get into rate cut chances and what this looks like. Markets are now seeing an 88% chance of a rate cut by the September Fed meeting. Now remember, we have the July Fed meeting, then they skip August, and then we go into September. My concern is that September is too late. I'm still pushing and hoping that we get a July Fed rate cut. And remember that the July Fed meeting is in the last 2 days of July. A lot of things can happen between now and then. President Trump, of course, is considering naming the Fed chair Powell's replacement as soon as this summer in a bid to undermine him. Will Trump remove Jerome Powell in 2025? The odds are rising here on Polymarket. You can kind of see rising now up to 14%. It was as high as 16%. Let me know in the comments what you guys think. Is he out before the end of 2026 or 2025 as he goes? Remember, his term ends in 2026. So some cool things going on here where we might get a rate cut definitely in 2026. I think the question is, will we get the rate cuts this year? We'll go to a clip real quick. Should Trump be allowed to fire Powell? Take a look.
He should absolutely be allowed to fire the Fed chair if the Fed chair is not doing a good job. Stuart, here's the truth. If this guy ran for office, he'd be thrown out overnight. The truth of the matter is that Jerome Powell has done an awful job. He was too late to respond to the rising prices in 2021 and 2022. We had 9% inflation. He bears the burden, and President Trump is right to call him out for it.
What impact do you think it would have on the stock market? I mean, that would unsettle the market, wouldn't it?
I think it absolutely would. To tell you the truth, I'm an investor, so I think that the stock market would probably panic and overreact in the moment. But the founders of our country did not envision a world where Jerome Powell can screw up so badly as he has done over the past couple of years and still keep his job. If the President of the United States cannot hold executive officers accountable for doing a bad job, then Stuart, guess what? They're going to keep doing a bad job. And so Jerome Powell is not above reproach. He should be held accountable. And if the President of the United States wants to terminate him and put a more qualified person in that position, the Constitution says he has a right to do that.
All right, so a couple of points to get at here. If Trump was successful in removing Powell, first of all, I think everybody needs to know we would most likely see a market crash. Now, how long would that last and what kind of implications that would have, still yet to be known. But if you look at the strategy that maybe the White House is taking, along with a lot of Congress right now, putting a lot of pressure on Powell to get going, because we are seeing falling interest rates, or falling rates on houses, falling rates on car sales, as well as next up will be retail. It's the thing that I'm most concerned around is toward the end of the year. Let me go over to the Polymarket, because this is the potentials that could be next up for Chair Powell's job. Chris Waller is the leader right now at 24%. He's in the lead. And then if you look at what Waller's position is, well, it's kind of obvious. And that is that he thinks we should see a central bank cut by as early as July. This is kind of the scenario I believe is the one that should play out, only because of the pressures that are continuing. There's two frames of thought here too. If he does, the pressure coming from not only the White House administration, but I think all of Congress and a lot of financial entities putting a lot of pressure on Powell right now. If he were to cut, I think he would still have the opportunity to reposition later. Remember, he did something nobody expected last year, and that was a 50 basis point cut when he didn't need to do it, but it was right before an election. So he's still within his means of being able to get a 25 basis point cut in July and watch and see how the market responds. I think there would be a huge run into the market, and it will show faith that this correction is underway and maybe getting away from the too late Powell moniker. We'll see. I want to go to a clip right here. This, of course, is Elizabeth Warren going at Powell for a different reason than you might think. Take a look.
You agree with Chairman Powell on these issues, or you think he should go ahead and cut rates anyway? Because that's what the president thinks.
Look, I still want to see the interest rates come down. I think they should lower. I want to see those interest rates come down. I do understand that conditions have changed and that Chair Powell says it is now harder to lower the interest rates than it would have been earlier. It is harder than it would be if Donald Trump were not out there creating this kind of economic chaos. And as a result, what we get is an enormous amount of holding back. And I think that's why you see the shift in the GDP projections. That's a shrinking of the economy that we're experiencing now, because independently across this country, big companies and small companies are saying, man, I'm not taking a risk. I'm not making a big investment into that kind of an uncertainty. And who is causing all that? One person, Donald Trump.
All right, so the point being is that when you do see a shift in GDP, like what we are experiencing in the rate, the adjustment of GDP, this is something that will affect jobs. And at some point, that's when Powell will unfortunately be too late, because at that point, you're like a snowball rolling down a hill. In many cases, it's difficult for major corporations to reverse course, mainly because of the impact on their own business. So there are some issues right now that really kind of center around what his position is, guiding the economy out of what has been, I still think, a recession, a soft one, but still a recession. If you look at his rating, this is his approval rating. This goes all the way back to 2021. Granted, that was during a bull run. It was during him printing, 53% overall approval. That, of course, declined in 24 down to 43%, and now it is at 37% in April of 2025. My anticipation is this probably slips below 30% in the coming months as we see more and more pressure from both markets and also the economy playing out. Powell's in a bad position right now. The other thing that I was getting at right here is the Q1 2025 GDP. This was revised down by 0.3. This is where I'm getting at, and I think, I don't want to say that I agree with Warren, but she is right, in the sense that there are a lot of people that are probably on the sidelines right now because of this volatile situation, which I think is why we're seeing so much pressure from the Trump administration, because they see the potential slip down the slope that could happen if, in fact, they don't get this under control. Remember, real estate is one of the big ones that is now starting to be impacted. We showed this yesterday in the Fed rate cut potential for July, and that is the number of home buyers versus the number of home sellers. First time we've seen a flip like this in a very, very long time. And when you look at interest rates for a new mortgage at over 6%, that is going to slow down buyers in a big way. It is going to cause havoc in the sales price of homes. And that is a big deal when you talk about most of Americans, their net worth is made up of it in that home. So a lot of things starting to get into this. Now, how do you play and how do you invest in this market at this time? Take a look at this clip.
I think the dynamic still at play is that you have an economy that remains fairly resilient, which is actually pretty remarkable given the headlines we've had. You have greater support from fixed income, just from an income level and a carry level, regardless of what the Fed does in the back half of the year. And then you have an equity market. I've been encouraged to see some of the broadening outside of technology, which has been just a V-shape one way for the past several years. So I think I would say at the margin, fixed income is compelling. And then I would be looking outside of tech, not because tech is in a bubble, but rather if this is an enduring expansion of the equity market, and we're going to test new highs, we got to see a broadening in participation in other sectors. But again, unless we see a wild shift further in tariff rates, it will not be enough to derail expansion this year.
I'm in agreement with the fact that even though we have seen the highest and the most fast ratio of interest rate raises that we've ever seen, yet at that time we've still seen a continuation of the S&P 500 continue to climb. And I think there are two things happening here. One, there is the have-nots, and that is the one that's being affected most by these high interest rates. People who need cars, wanting to buy their first home, those kind of situations are real. Then you have the unfortunate issue is you have the rich, and the rich have been able to accelerate into what is maybe the next generation of a golden age. And I think a lot of this will be led by blockchain, AI, and where the next generation of these tech companies come from, and maybe a little bit of a shift. So I am still very bullish on where tech is going to go, but it needs to be in a position where the rest of the economy can come along with it. And that's where rates are so important. So it is a big deal. You look at foreign investors, they've purchased 128 trillion worth of U.S. financial assets. This is since 1991. This is a net, according to BOA. And this has been particularly driven by equity purchases. So everybody is in on U.S. equity. So it's very clear that regardless of the fact that the Fed has been the hardest cutting, we have continued to see the rich getting richer. And I think that is the big point going forward for Powell. This is the way he's going to be able to adjust the economy. Just in also other things going on right now, the judges denied Ripple's SEC request and SEC's request to end the XRP case early. There are some things going on within this. This was Meta Law. He kind of notes on this that the Ripple and SEC do not need permission from any court to dismiss. They can go in and just run their dismissals. So I think that most likely will be the case here going forward. Other things that are happening right now in the market, you've got Kalshi and Polymarket going head to head, with Kalshi's valuation almost that double of Polymarket, which I think Polymarket is really the better product, but they've been unable to really get positioned here in the U.S. Here's Shane Copeland as one of Time 100's most influential. So this is going to be very critical, I think, for not only markets, what we'll see in predictive areas around sports, the future of predictive marketing. We're going to see a lot of issues, I think, that are going to flow into this area. And who's going to win? I don't know. Other things that are happening right now is ETHCC is getting ready to take place over in Cannes. There are some things to watch. When you take a look at who the sponsors are, guess who you have right there, front and center, Robinhood and CL. This is something that we've talked about over the last few weeks, is that Robinhood may be getting ready to drop a massive bomb into the market of something that could really affect crypto. I think in general, you got to keep an eye on what they're doing, because they could end up with tokenized securities, and it's very possible we could see this moving into one of the blockchains we've mentioned here before on the show. If you look at all the others down there, I mean, there's a lot of people there, so the potential here is a big announcement, even Base running in as a Ruby sponsorship level on that versus Robinhood running in at the top tier. Other things I want to hit on is, if you remember, we talked about this, Robinhood has got this deal where if you transfer your tokens into Robinhood before July 7th, you can get up to, earn up to 2%. There is a caveat, and that is that they got to hit this big number, and whether or not they do is the question mark, because it's 1% if they don't, it's 2% if they do. So it's kind of a community effort. So just be aware of that for you guys. If you're thinking 2%, you can't necessarily just get 2% automatically by investing in there. Be aware of that. We've talked about Global Dollar Network before, and this, of course, is where a lot of companies and entities can start utilizing it. And you look at the potential of any kind of stable coin. I think the opportunity is going to be distribution. So the fact that Kraken is launching this out there, most likely this is going to go out on Robinhood. We'll see this most likely in retail centers, big brands, etc., that may go this route as well. All right, guys, we'll be covering a lot of what's going to be coming out of Cannes next week as we start to see some of the materials release. Big deals, I think. So pay attention there. If you're not subscribed, make sure and do that. And if you're not in the Diamond Circle, get in. Leave a link down below. You guys can get to that. It's free. And of course, follow me on X at Paul Barron. We'll catch you next time right here on TechPath.